Hey there, in this video, we are going live to give an update on Bitcoin going into August. I also want to give you an overview of how I, analyze when I'm making a specific trade. We're actually in a trade right now on ADA, shorting ADA right now. And I want to give you just a step-by-step process on how I will kind of analyze the market in order to before I'm actually entering a trade. So first of all, I always go from the top down and understand from the macro point of view. So right now we're looking at Bitcoin on a 15-minute chart. What I would prefer to do is actually look at, well, what's going on in the world, okay? And the most important chart right now, after you understand what the Fed is doing, right, and you understand they're hiking rates, and hiking rates is usually bearish for the market because it makes money more expensive and people get fearful and they end up not spending as much money. So what I want to do, and that typically makes the dollar stronger. What's the difficult part about it is when the dollar is super strong, all the assets it becomes very difficult for assets to appreciate because remember, we usually denominate almost every asset in the US dollar. So I want to know what's going on with the dollar chart. I am really hoping that the dollar actually reverses going into August and we can create a new lower low. If we can break this little previous low that we had, I would feel very, very good about starting to put more money into assets because it would help them start to reverse significantly. But we will see if we actually break down or if this is just a little short-term correction and it's breaking higher. We have been on a parabolic move with the dollar. So first and foremost, understanding what's going on with the dollar. Next thing I want to do is understand what is going on with the stock market. Well, we got the recessionary news, we got the rate hikes, we got the recession news the other day, and then we saw actually the markets respond very positively to that news because first of all, it gives people more certainty with what's going on, okay? Because we finally figured out, okay, we're only hiking 75 basis points. It's not 100. We also understand from the tonality that the Fed is using, they're starting to be a little bit more worried about the recession as opposed they were previously because they pretty much knew that they were in a recession even though we weren't classified as one. They were saying we weren't going to be one, and now we are. Now they're trying to change the definition of a recession. But it's very obvious that currently we're in one. We just got in one. It's a mild one so far, but the market's responded positively. So overall, my thesis before going into a trade is understanding, okay, what's happening with the Fed, what's happening in the macro, what's happening to the US dollar. Then it's looking into a really large index like the S&P 500 because Bitcoin has been correlated to the S&P. I think it's over 80% the past 6 months. So I want to look at what is this index actually doing. It's breaking out of resistance, which I do believe is a shorter term type of a move. I am not sure how high it'll go. Potentially it'll go to the 200 day moving average, which is right around 434. We'll see if we actually get that high. I wouldn't be surprised if we kind of tap a trend line like this, which would put us, right up here, right close to the 200-day moving average. So this honestly would potentially be my target here. So overall, I'm kind of feeling, okay, maybe we have a shorter term relief rally, and then I do believe that we are heading for lower levels. If we were to, zoom out, I think pretty much there's only one person that kind of argues with how low we're going. Or not how low we're going. If we're going low, I've only seen a few people talk about a melt up, but I wouldn't be surprised if we at least test the highs of COVID, which we're only halfway there, which would be around a 30% correction. But who knows? It could get even spookier because also I've been listening to other really prominent fund managers like Stanley Druckenmiller talk about how every time inflation was over 5%. We had a really big, a hard landing, right? It wasn't a soft thing where we just kind of melt down and head back up. It was a pretty fast landing, right? So potentially what is in the cards for me is a nice, relief rally, potentially up to the 200-day moving average, and then come back down. And I'm kind of eyeing the COVID highs, maybe even a little bit lower. If we look at, 08, we came down 56% or whatever. So that would put us a lot lower than that. That would be put us close to the lows of COVID. All right. So now I understand what my thesis is of, what the dollar is doing, what the Fed's doing, what the stock market is doing, because they're so heavily correlated and everything is pretty much relying on what the Fed and what the stock market is doing. So now I can kind of look at, okay, what is going on with Bitcoin, right? And I always want to start with Bitcoin when I'm trading cryptocurrencies, because I need to understand what the beast is doing. All right, this has over 40% of the dominance of the entire market, and when Bitcoin moves one way in a big way, it pulls everything else with it. It's very rare that you find another crypto that is inversely related. If you know one that's inversely related besides an inverse leverage coin, let me know, because I have not found a coin that is inverse related to Bitcoin. Typically, Bitcoin will pull everything. Some of the low caps, right? The really low caps that are below 100 million, below 200 million. Okay, they could go up when Bitcoin's going down, but if Bitcoin goes down in a big way, it's going to pull those. But some of the low caps are some small exceptions, and I don't trade those. So I always trade like top 20 type coins. All right, and sometimes I'll go, top 50. I guess probably the smallest one I've been trading recently is like Harmony One. So then I'll look at, okay, what is Bitcoin doing? So once again, we've had a big sell-off. We came down 75% from the highs in November, and we formed a really big bear flag. We formed another big, smaller bear flag here, and then once again, we are forming another bear flag here, which I'll actually let's go ahead and zoom into the actual bear flag here. We'll go to Bitstamp here and see what is happening, which is once again another bear flag. Kind of looks like we are in an Elliott wave. We are extending this wave, and we have come down to the bottom of the bear flag and are retesting. We retested resistance once again, and now we're coming right back down. So will history repeat itself? Well, we potentially may sell off here if the stock market does not, start the week off pretty hard. I am definitely more bearish and expecting a move down to support. Now that we have actually reversed off of resistance, I am expecting that move to at least come down and touch support, which could be a really great trade, which is what I'm actually currently in a small one right now. So I'm actually playing this move to an extent, but keeping stop losses close. And I'm also going to share one other thing here in a second because there's so many scam wicks in crypto. You got to be pretty careful before entering a trade. So, now we're reversing and potentially coming down to support here. Now, one of the things that, I think about is, okay, are we going to make this move past this support? If we do, what I would want to be in is a short trade outside of this swing low, not even this one, because sometimes we come back down, scam wick, stop loss hunt, voila, right back up, and you lost all your money. All right. That's why we set conditionals outside of the second previous swing low on these bear flags in particular. So when we actually come back up, and what I'd probably do is set it to retest the most recent swing low. So we would start here, and then the trade would probably come down. We would probably use a fib to figure this out, but it would be closer to probably the 14-15 range. And we would actually be entering a conditional trade that would then bring us down to potentially the next low. And I would really be looking for longer term support and resistance that is way over here. So that's one thing, right? We'll have conditionals. If we do break, we'll be in those. Regardless, what I'm doing right now is trading the shorter term stuff. So what is going on short term, right? If we actually zoom in and understand on a more granular level what is happening, this is what I'm talking about with these scam wicks, right? We have Bitcoin come up like a goddamn roller coaster, reverse back down, and then right here, I was watching this live today. Just massive move up. Let's wick everyone out that has their stop losses right here. Get it wicked out, and then we come back down, and we have a huge wick down. All right, let's go ahead and stop everyone out of their trades. Let's put it out of this previous swing low. Voila, we come back up, and then it looks like we're potentially going to reverse, and we come right back down, which I see this over and over again, and this is specifically something that I look for when, especially around like support and resistance. This type of stuff always happens. So when I was watching this happen, I was like, okay, well, we kind of have the left shoulder right here. We got the head right here, and then this just happened. This is probably the right shoulder right here. This was just a stop loss hunt to shake everyone out, and then I re-entered a trade right here on ADA because I like to short the heck out of ADA. I don't know why. I just always short the hell out of Cardano, probably because it stinks really bad. So what I do is I typically look, what Bitcoin's doing. I actually see that it's reversing. Maybe it's going to touch this resistance, so I'll trail a stop now, and I'll be in an ADA trade right here. And I realized, partial profit at this little support line that we had. Same thing with the ADA, right? I saw we're in this rising wedge. We just saw Bitcoin reverse. If it actually breaks this pretty significant trend line, this would be a really good short. So what did I do? I started to short right here as I saw Bitcoin starting to melt down after that stop loss hunt. And now, I took a little bit of profit right at here, because what I did is I put my stop loss right outside of this swing high on these. See how it had a very similar scam wick to Bitcoin, right? A huge move up and then a huge move down just to stop everyone out. That's what I'm talking about. Pretty much all these coins follow Bitcoin. So I want to understand, what is Bitcoin doing? Okay, once I understand what Bitcoin's doing, then I feel comfortable actually hitting a long or a short on another, altcoin that typically has more volatility. And at least, for me, I study ADA and I've watched it since literally $1.80, and I've been shorting it pretty consistently down to like where we're at now, and it has some pretty weak price action. And that's what I typically look for, is altcoins that have less volatility to the upside, but more volatility to the downside when I'm shorting, right? So I want to look for things that kind of have some weak price action, and that's exactly why I entered this ADA short. So that was from top down to the bottom. If you guys are just tuning into this live, I just went through the entire, the majority of my entire thought process around this trade, right? I go top down. I want to understand what the overall macro picture is looking like. What's the US dollar looking like? What's the stock market looking like? What's Bitcoin looking like? And then what are some altcoins that are potentially, at a key level of support resistance that I maybe want to make a move on. And then, like I said, if you're trading, you got to realize that you're pulling money out of the market. All right. This isn't similar to like long-term investing. So what I do is like, if I'm short or long, it doesn't matter. But I'll typically go in a position, and then once we're at like a key level of support, sometimes I'll realize like 50% of the profit. So I'll just like close by limit right here, and I'll just close 50% of the trade right there, and then bam, I'll lock in 50% of the profit, especially if that can cover the risk on the trade. So if my risk was $500, I'm in $1,000 of profit. If I close 50% of the trade, now I'm in a risk-free trade because I just realized $500 in profit from that trade, which now allows me to allow this trade to progress more and more. So now I don't have to like be worried about it reversing and, oh my God, what's going to happen? I can let this thing kind of ride out. And what I do is I enter a trailing stop loss. So I'll put a trailing stop in right here. I'll actually you just click this little edit button right here. You would create a trailing stop. So if ADA reverses 0.005, then it stops me out. That's what this little green line is. So if we come up to this green line, then I'm out of the trade, and I entered it all the way up here. So that's well into profit, right? But if we keep going down, this trailing stop will keep following, and I'll allow to milk the trade more, right? And that's what it's all about, reducing risk, but allowing winners to ride and cutting losers early. So that's why it's really important to like understand what is going on contextually, and then understand what type of software and risk reducing orders to actually put in place so that you're not going to blow up your entire account. And the same thing, like this is a 100K account, and I risk like 0.05 or 0.5% of this account I'm risking on this trade, just because I'm kind of playing around, but also because I will not risk more than 4% of the account on any given trade. And if I'm in a losing streak, I'll lower that down to 3%, 2%, 1% to make sure that you're not blowing up on accounts. Because trust me, I have blown up some accounts before. I've also made a lot of money trading, but typically you don't learn until you learn on your own. I could tell you 11 things that have taught me a lot of lessons, but until you kind of start to experience them yourself, you won't actually understand the importance of the things that I'm, talking about. So I've literally made millions of dollars trading, and I've also lost over $1 million trading too. So it's gone both ways, and I've learned a lot of things, and that's why it's so important to understand from experience, and also understand that you gotta practice the proper risk management. So anyways, that's the majority of my top-down approach when I'm actually entering trades. It's a lot of people I don't understand. There's a lot of like just TA only people. I also like to understand what's going on chain stuff that's like kind of shorter term, especially if we're looking at like funding and open interest and that type of stuff. Like I really think one of the best pairs as far as indicators go is funding, open interest, and volume. If you can pair those three things and understand how those operate together, it can allow you to trade a lot better. That's probably a whole nother video I should shoot. So anyways, want to see if we have any other questions. If not, I'll kind of just walk you. This is like 10 grand. So this software. So I'll walk you through kind of what's. There's been a lot of bottoming indicators recently that have flashed, which is why I've been adding to some of my longer term positions. Realized price is at the buying signal here. We're below the realized price. We're at the Puell multiple at the bottom, which has timed every bottom pretty well. If we look at entity adjusted net unrealized profit and loss, same thing. We dipped into the red. If we look at what else do we want to look at? Z-score, which is probably my favorite bottoming indicator. It showed us in the buy zone here. Excuse me. And there's a few other things that I'll look at as well. Like the R-HODL ratio came really, really close. Not all the way there. MVRV dipped into the buy signal as well. So, but then it's like also understanding kind of the macros, stuff that's going on with inflation and the rate hikes and stuff. So that's why I'm not like, if we didn't have the macro stuff going on, I would be like all in, to be honest, right now. As far as the cash that I set aside in order to buy the dip, I'm not talking about selling my house of bananas and rice. I'm talking about strategically scaling into an asset when it's actually sold off. So, shout out KDA. Yeah, actually KDA has done pretty freaking well today. Let's go look at it. Yeah, it's at $2. It'll rip. Trust me. This is going to take time though. Like I am not banking on KDA to go. I'm not banking on anything to make me a lot of money in the next few months, except for actually strategically trading. And my goal is to do 10% a month. That's all I'm trying to do, which is actually very good if you can. But just 10% a month is what I'm consistently aiming to do in my trading account, because 10% compounded per month is a pretty big deal when you look at it over a few years. Yeah. So anyways, yeah, KDA, I'm really bullish on this long term. And to be honest, one of the main reasons is not just because of the team and the technology and stuff. It's also the packed code, because here's the thing about the only way that these layer ones have any type of value is from developers building on top of it and users actually using the applications that the developers are actually building. Okay. It's very similar to like AWS. So if these layer one blockchains have pretty much no adoption, then there's no point in actually buying these coins, because if the ecosystem is not growing in developer activity, and then ultimately the users are not using that specific platform, then they're not going to have long-term value. And the thing with the coding software called Pact on Kadena, it makes it super easy for people to actually develop. People that aren't coming out of the wound with a computer in their hand that know how to develop can actually write code that they can read as a human. Okay. And that's what's really important. Is I think we're going to go to a place, and we're already seeing this with Solana, by the way, is Solana, they're going all in on the phones. They're going all in on their like they literally have. So they're coming out with the Solana phone. They're also coming out with they already came out with their brick and mortar store, which is like selling like Solana goods, and I believe just trying to get people to start using their apps and building on top of Solana. But they're going all in because they think that the world, which I think as well, is like we're going to move to a place where it doesn't take a team of 65 developers over in India to build you an app. We're going to move to a place where we can like launch an app in a smart contract, and like you and I could enter into a bet against a sports game right on a blockchain, and I can type up the smart contract on my phone, program it onto the Kadena blockchain, and we can enter into that agreement. And the next 18 months, I think, is like when we're going to start seeing like maybe some adoption on that type of a level. But I honestly think it'll probably take closer to like 5 to 8 years until we start getting to that point where people are actually using that. And that's the same reason why Polygon also started moving in that direction as well, is they started to partnered with HTC. Okay, same thing. They want people to go develop on top of Polygon to be able to launch smart contracts and decentralized applications. So that's what really matters. And I'm looking for the tech. The 4 things I look for: what's the utility of the coin? What's the tech behind the actual in this case layer 1 blockchain? How good is the tech? It's very scalable. Okay. I also want to make sure that the user adoption is easy. So, for example, the pack code is a lot easier to use than other types of Solidity and other types of smart contract language. And then also looking at token metrics, which the reason why I haven't bought the dip heavily and I'm mining KDA right now instead of buying super heavily right now is, one, I don't know that the sell-off is over, but number 2 is it inflates pretty heavily right now, which is good because it has to inflate for long-term adoption, because that's how you decentralize a network, is you incentivize people through inflating the coin. Same thing that Bitcoin does, same thing that Ethereum's done. All those, that's how you get, decentralization. Because there's no one that's going to like just throw a bunch of money at a bunch of random people that are setting up computers. You got to incentivize people through mining, which allows the network to be decentralized because it inflates the coin. So I understand the long-term vision of Kadena, but in the shorter term, it does pretty heavily inflate right now, which typically, miners got to pay for their electricity. So it usually can, temporarily bring down the price, which is just a shorter term type of thing. Do you think the market will drop one more time? Yeah. Yes, I do. I was kind of talking about that earlier, which I know I just ripped this live pretty quick, but I wouldn't be surprised if the stock market kind of reverses to like the 200-day moving average. We then come down and have another, correction. I don't know how far we're going to go. But I was, kind of stating I wouldn't be surprised if we at least go tap the highs before COVID, which is, 29%, which is really not that bad. If we did something like the last recession, the major recession in 2008, we would literally come all the way down to the lows of where COVID was, because we, in 08, the stock market came down like 54%. So I'm not sure if that is in the cards, and the reason is, if we didn't print all this money, I would say absolutely that's in the cards, but we just printed 50% more dollars, and the dollars don't just disappear. So for me, I don't know that we're going to have that big of a correction because there's so much more money in circulation now. And if you don't put your money into assets over long periods of time, you are going to get absolutely smashed from inflation. But on the shorter term outlook, like, I don't know if we'll sell off as hard because there's so much more cash in circulation, but I don't know. No one knows, to be honest. Even the smartest people in investing have no idea what the hell is going to happen. They have probabilities in their head where they can say, oh, I've seen previous things happen like this. The technicals are showing me this. The fundamentals are showing this. I think the Fed is going to do this. And here's the probability. Maybe it's a 60% probability that we see a move, 20% correction. And then, another 30% probability that we see a 40% correction. And It goes on and on. So it's all about having probabilities in your head based on what you contextually understand about the entire view on the market and stuff. So I do think we are going to see a nice relief rally. As far as Bitcoin goes, I wouldn't be surprised if we've been trading in this. I got to put the Bitstamp one on here because I've done this twice now. So I wouldn't be surprised if this bear flag kind of we're trading to the bottom of the bear flag now. So we are definitely in a shorter term little correction potentially to the bottom of this bear flag. We'll see what the stock market does on the opening tomorrow, but I wouldn't be surprised if we at least trade to the bottom of this bear flag. And if the stock market opens up strong tomorrow, I wouldn't be surprised if we see Bitcoin actually break out of this bear flag. And I don't know that I would move up to the 200-day moving average, but I'd probably come somewhere between 28 and 31 is probably where I would be looking to just for some more exit liquidity. So like this is kind of a longer swing trade type of thing, and then I usually just trade inside of these bear flags while we're in them. Yeah, like here's ADA. Conditional is still sitting there. We'll just kind of let this ride as it's coming down. Let's see if we have any advice. Yep. From responsible trading tips to looking for chains with dev and real users. Exactly. I'm telling you, I look at a lot of fundamental stuff, a lot of technical stuff, because there are absolutely patterns and charts. And when you understand these different types of patterns within the side of these charts and the support and resistance, and then you start to pair that with indicators, like we've kind of got a bearish, divergence right here, right? Because we've got price going up. We're trading in an upward type of a wedge here, but we also see that Bitcoin's breaking to the downside. But then we see the RSI more in a downtrend, which means the strength of the asset is kind of coming down, right? So the price is going up, but also the highs are getting kind of lower and lower and lower, right? You can see that. We had a big leap from this high to this high to this high to this high to this high, and it's kind of getting smaller and smaller. You can kind of see volume slowing down. We got a head and shoulders type of a pattern. We see Bitcoin reversing. We also see bearish divergence because the RSI is in a downtrend. We got lower highs, but price is going up, and then that kind of leads to the correction there. So when you start to understand that on a technical basis, you realize how I also am this was a lot of this was technical, because a lot of it's shorter term stuff. But especially on these longer term type moves, you got to be studying some fundamentals too. And I really just do not understand people that are only technicals. Like when people say that they only watch technicals, which is great. Oh, we got a head and shoulders here. We got an inverse head and shoulders here. We reversed here. And I'll just show you guys one more indicator too that might flash here. But when people say that they are only technicals, I'm like, so this COVID flash crash, you knew that one was coming, right? Because of bearish divergence, you knew that we were going from 10K to 3,800 in a matter of a few days. Yeah, I'm sure you did. Okay, that's why it's really important to understand the fundamentals as well, and how that can affect the price action of whatever the hell you're looking at. And then, I think what's interesting too is like the hash rate of Bitcoin has been coming down, which is always something that I watch because previously it has done a very good job at actually every time, which I don't think there's even one instance that it did not do this. After it's shown this buy signal, we've gone up at least 50%. So in this scenario, we went up even from this low. This wasn't the actual low. That was a low. Even from this scenario, we went up 130%. Okay. Same thing here. I mean, this was like 600% or whatever. Okay. Same thing here. I know it doesn't look like anything crazy, but that was actually another at least 50%. So like, we'll go ahead and look after this buy signal. Let's see what this was. Oh, no, I'm proving wrong. 38%, but really, we then moved up actually over here. So really, probably should have taken it from this low to this one. Same thing here. This was a really big move. It doesn't look like it. Same thing here. So anyways, every time there's been a buy signal it is shown on hash ribbons, which is just, pretty much monitoring the terahash of the Bitcoin network. So when miners kind of capitulate, that's what this is. So this was over in China when China banned all the miners. We had, the Bitcoin sell off. This was midsummer last year in 2021. Miners also capitulated. See how big the terahash came down of the Bitcoin network, and then once it starts to reverse, you'll see it shows capitulation here. You see some green. Once the terahash, the rate actually starts to go up, and people start to mine more and more and more, then it prints a buy signal, because typically the price fluctuates with how many people are mining on the network. So when you see the network coming down because miners are capitulating, you'll see once this actually reverses and the terahash starts to come back up on the network, it'll print a buy signal. And it's not straight to the very day. It's usually a lagging indicator after we already see the move. But it's just another thing that you can pair with other stuff, right? Like looking back, there was so much divergence, and I honestly use price action a lot more than any type of an indicator. But if we look back, like there was such heavy divergence in price. I don't know how I didn't notice this to the extent, but look how much of a downtrend we were in this entire time. And then we had a big head and shoulders pattern, and we sold off. We came down here. We formed an inverse head and shoulders. We got the shoulder here, the head, the other shoulder here. And then guess what? The RSI breaks very cleanly this downtrend, very strongly right here. If you would have entered right here, right, which I'm not saying every time that RSI does this you would enter, but like seeing that this just broke really heavily, you're seeing a kind of volume pick back up, you see a buy signal on the hash ribbons, and you pair that with a few other things, right? There can be a very strong probability that you're in a pretty good trade. So kind of understanding divergences as well is pretty important. And that's that, just looking back, obviously it's always hindsight's 2020, but it was pretty obvious. Ivan on the Pompomental song is a classic. I've seen that video on Twitter like twice now, and I think it's hilarious. It is so funny. I didn't know that there's a song. Is there actually a song? The Fundamentals Pompomentals. Wow, if that's an actual song, I'm gonna have to listen. I'm gonna have to get off here right now and go listen to that. Maybe that's what we'll do. What do you think of Feds changing the definition of recession? I think it is absolutely ridiculous, and they are just trying to hide the fact that that we're in a recession. I mean, just own up to it. One of my favorite quotes of all time, this is not just finances, the truth will set you free. You got to be truthful, with yourself. If you don't have what you want, if you're overweight, if you're in debt, whatever the hell it is, you got to own up to where the hell you're at, be accountable for what you have had thus far in your life and the results that you currently have, and then go make shit happen. All right. And same thing with the Fed. I think it's really ridiculous that now that we're actually in a recession after pretty much a 13-year bull market, they're now trying to change the definition. I do not accept the new definition, and I am obviously, just like any other prudent person in the entire world, am sticking with the fact that we are in a recession. But that does not mean that which, by the way, I try to state this as well. Oh, there we go. It reversed, and now I'm out of that ADA trade, so the conditional hit. By the way, I am all for understanding that recession means opportunity. It does not mean curl up in a little ball and get all scared. You should use recessions to learn and develop skills, to focus on making more money, to focus on investing into assets, because it's very rare. We haven't seen one of these truly come in like 13 years. Right? I guess we saw the COVID flash crash, which was a great opportunity. I bought that dip pretty heavily while everyone was pulling money out of their bank accounts to go buy gold and go buy 11 cases of toilet paper. I was there buying assets and not crapping my pants. Okay. I just ordered things on Instacart. All right. I'm not going to waste time going to the grocery store. Anyways, I think I do need to go watch to the Pompomentals right now. So I definitely appreciate you letting me know. And it is 7:38, and I got to eat. I've been trying to eat earlier. And here's another thing. This bear flag rejection off the 200-day moving average, that is like the most bearish thing you can ever see in the history of the world. So like technicals are really important, but it's also understanding the overall picture as well. I've just learned to trade from. I've got like a few people that I learned from. A lot of free stuff online. I've taken a few trading courses, but a lot of it has been me just getting absolutely destroyed for years. Like until I was ripping 50x leverage trades in 2017. All right. And I was doing that in 2018 as well. So I rode that wave all the way up and then all the way back down. And I made some money, and then I lost it all, and I lost it all again, and then I lost it all again. So I just learned a lot from my own mistakes, and I learned to catch things. And you do that from keeping a trading diary as well by, maybe you call it a journal, whatever the hell you want to call it. I will do it in my notes on this computer. So I will, like before I enter a trade, I'm always asking myself, what's the thesis of the trade? All right, I got to understand, why am I entering this trade? Well, we've reversed off the bear flag, right? Maybe stocks are starting to reverse. So I've got like certain things playing out that like, okay, here's why I'm entering this trade, and I believe in this trade actually executing and hitting the take profit down here. So number one is having a thesis of the trade, actually charting it before, like actually understanding, like you got to actually chart stuff before and set, stops and take profits and understand what your risk reward is. And that's another thing on the journal. I'll do, what's the thesis of the trade? What's the risk reward of the trade? I want to know, what overall I believe the probability of success in that trade is. So like I like to kind of monitor what I believe the actual probability of the success of that trade is, based on, the technicals, fundamentals, all the stuff that I'm looking at. And then also putting in like the actual numbers that I'm executing on the trade. And then what you do is you go back and you look through your journal and you spot things where you're making mistakes. You're making consistent mistakes over and over again. And you say, every single time I put my stop loss too close, it gets stopped out. Okay, so now I need to understand that I should probably use an ATR that I used on the previous, swing high. So I take this ATR of 1249 and put it out of the swing high right here, and then I'd put the stop at X, Y, and Z, right? So it's starting to understand, like, catch yourself making mistakes. It's the same thing with everything else in life. If you can't measure it, you can't improve it. And that's why it's really important to be able to measure what you're doing, look at what your actual win rate is, and then be able to decide what you need to tweak in order to fix things. Do you think is bad investing in Chinese stock with everything? Yes. I mean, I don't know. There's probably some good Chinese companies. I don't study the Chinese stock market, but I do understand that they are in 300% debt to GDP, and they are They are dropping interest rates, printing more money, manipulating their currency. To be honest, it does not look good. I know people are saying that China is going to take over the world, economic power over the U.S. I do not think it's happening anytime soon. I think they are in a massive, when I say anytime soon, in the next 10 years, I think they are in a massive debt bubble. And by the way, their real estate debt bubble is huge, but their transport debt bubble is even bigger with all the railroads and roads and highways that they built. They are in a lot of debt, and also they're just locking down all their economies. So I think China is going to be in for a rude awakening. I wouldn't be surprised if they kind of tip over the market even more. Like, just so you guys know that the U.S. is like 134% debt to GDP, which has been skyrocketing recently, which isn't a great sign, which means that we consume, 1.34 times as much as we produce. But China, consumes 3 times what they produce. Although we import a lot from China, right? And also them shutting down all their factories because of all these. Oh, we got the monkeypox 19 coming out on the 11th strain Okay, well, they're shutting down all their factories, which then increases inflation because inflation is too much money chasing too few goods and services. So when you decrease the supply of the goods and services, specifically the goods that we're ordering, but then the goods, for example, on housing, right? If we're ordering things to build houses from China, we can't actually fulfill on the service of building a house. So the goods and the services inflate in price because the supply of all that stuff has been shrinking. So that's a huge impact on inflation, not just the money that we've been printing, but also all the lockdowns that China has been doing over and over again. It's really bad for everyone, because when inflation is running rampant, it's very difficult for people to get by because the purchasing power of your money is just falling so drastically. We're in a really, really weird time. I just started trying things to test my theories. Yeah, that's great. It's all, honestly, you got to test. And by the way, some trading strategies that will work for me probably won't work for you, because you got to practice self-awareness and understand who you are, what type of person you are, what type of strategy you want to implement, because not everything is going to work, for you. And by the way, we just released a new program too. If you guys want to actually learn how to trade and be a part of a community, I just released a program that I continually add content to. And my goal is to develop people into consistent traders so they can make money from anywhere in the world at any given time, to have uncapped earning potential and not have to report to a boss, and also not have to manage a team. Because that's what trading allows you to do. It is not easy, but it is a pretty simple skill that you can learn. If you have discipline and you have patience, you can absolutely do it. So if you want to learn how to do that, I'll put that in the description of this video after it's over. I'll probably answer maybe one other question here. BTC outlook on the next 2 months. I do think that if I had to, I think it's like a 60% probability that BTC actually kind of reverses up to 28 to 31. It all depends on how the stock market opens. If the stock market opens this week and it starts to reverse, actually, honestly, it really depends on what the dollar is doing. So if the dollar starts to bounce off of this resistance, which it kind of looks like it is, I hope it's not. I really hope we create a new lower low, because if the dollar does retrace, I will be really bullish Bitcoin. If the dollar does not retrace and it starts bouncing back up, I think Bitcoin's just going to break this bear flag and we're going to head lower. So, and when I say lower, to like the 15K range, I think we probably see a wick into the 14. If the dollar does reverse, I'm really bullish assets in Bitcoin, and I would be, I'd be looking to start exiting around the 30K range on BTC. But it's kind of something that I would analyze when we get there and see what's going on with stocks and with the dollar and all that stuff. But yeah, overall, shorter term, I wouldn't be surprised if we see Bitcoin trade once again to the bottom of the bear flag, which is like right down here, right down to like 21,600. I would not be surprised, because we are kind of seeing that reverse right now. But if stocks open strongly, I wouldn't be, surprised if we jump up to 30K. There's a lot of volume that's traded in the 30K range, and that would not surprise me whatsoever. If we do if that does not happen, the dollar does not reverse, if stocks are starting to reverse, I think we're just going to, fall through the support and potentially come down to the 15K range. Awesome. Thank you guys so much. Have a great evening. I'm going to start ripping some lives more often, because I used to do these and they were pretty fun, but I want to come in with some educational topics, so that as you rewatch the replay, it's actually worth your time as well. So every time I do a live, I'm going to come in hot with a topic, and then we'll just answer questions at the end. All right. Thanks so much for watching, and hope to see you. Oh yeah, post another video probably tomorrow that's really strong, that has nothing to do with trading, by the way, but it's principles based, and it'll pay you for the rest of your life. So make sure to go watch that video tomorrow, and let's pump